President Xi's an incredible guy. Got along, made a lot of great trade deals, including over 200 planes for Boeing with a promise of 750 planes, which will be by far the largest order ever if they do a good job with the 200, which I'm sure they will. And that's General Electric also, the engines. So they're buying General Electric. So it's approximately 450 engines and 200 planes, and a promise of up to 750 if they do a good job.
That's President Trump on Air Force One talking to reporters moments ago. He's making his way home from Beijing and that summit with Xi Jinping. The president also said that he is considering whether to lift sanctions on Chinese companies who are purchasing oil from Iran. He said a decision is coming over the next few days. Obviously, that was something Xi Jinping wanted him to consider. Markets this morning are pulling back. We got a triple-digit decline right now. Dow Industrials down 413 and the Nasdaq down 471 after a huge couple of months of major gains and record highs for this market. Joining me now is Unleashed Prosperity co-founder and former Trump economic advisor Steve Moore. Steve, great to see you. A lot to get to this morning, so let me kick it off with China and get your assessment of the president's trip.
Well, those numbers that you just recited are amazing. It just confirms, Maria, what we all know, that nobody understands the art of the deal better than Donald Trump. And it looks like I don't know all the details, none of us do yet, but it looks like he's walked away from China with a lot of money in the hands of the American economy. The most important thing we need to know is how cooperative China will be in terms of getting the Strait of Hormuz open. They have not lifted a finger yet. I hope that given that deal that you were mentioning about the sanctions, I hope that goes along with China opening up that Strait of Hormuz. You know, you just mentioned those amazing stock market performances in the U.S. over the last several months. Really incredible. And you've used the word that I'm using all the time right now, which is resiliency. The resiliency of the American economy and American businesses has been unbelievable. There is a front page story in the New York Times about how, China is now the it country. Everybody wants to invest in China. What are they talking about? Our market has completely soared way above China's over the last year, over the last 10 years, over the last 20 years. So I'm not buying that China story whatsoever.
No, I haven't heard that at all. Got to invest in China. I mean, first of all, you invest in China, you're going to get your company and your investments surveilled. So you'll have that surveillance around you. And secondly, are you really investing in a public company, or are you investing in government and funding the expansion of our number one adversary? So I haven't heard that. America, obviously, has seen growth, and that is what is behind these numbers. Earnings have been better than expected, partly due to the president's policies with regard to the big, beautiful bill and all that expensing going on. I think it would have been a much bigger victory had the president come home and said Xi Jinping is going to buy oil from America. Now, we did say that Xi is considering it. They're going to send Chinese ships to Louisiana and to Texas. So let's see. I'll believe that when I see it. I think that would be huge, and that would be a very positive thing. We'll see if China actually carries forward on that. But get back to the U.S. economy right now, because I got to get your take on what Kevin Hassett told me over the weekend. The head of the National Economic Council is talking about big numbers when it comes to economic growth in this country. Watch this. What kind of economic growth number would you expect for 26 and beyond then? Let's assume that we do get out of this war fairly soon. What kind of GDP growth number would you expect for the U.S. economy?
If you look at how fast the capital stock is growing, that's sort of like how much stuff that we make stuff with. It's between 5 and 8% right now. If you divide that by 3, that's about how much GDP growth you get out of just capital spending. We've got productivity growth at 2.5. I think we really could be looking at numbers north of 4, north of 5, north of even 6, because there's so much capital stock growth right now. Remember that the 2% number that you saw for GDP growth, the reason why it was 2% and not 4 or 5% was that we imported a record number of capital goods because we're building all these factories. Once we turn those factories on, you're going to see really growth unlike anything we've seen before.
So what do you think, Steve Moore? Now, I think Kevin Hassett does a great job. He's got a lot going on in terms of getting supply chains back here, looking at economic growth. Productivity boom is underway right now. I am all in on that. But 6% plus growth this year, I don't know.
Well, look, I'd take 3 to 4%. I think that would be amazing. Look,
Yes, exactly.
Kevin's analysis is completely correct. We are seeing one of the great investment booms ever, and that is going to lead to one of the greatest increases in productivity ever. I'll tell you something that really worries me, Maria, and I think all of the investors have to pay attention to this. What is going on right now with the citizen revolt against AI and data centers? Silicon Valley better start paying attention to this, Maria, because this is like somebody lit a match in a campfire, and now it's become a forest fire. So you're seeing in towns all across America revolting against, they don't want AI, they're saying we don't want the data centers, and that's a big problem. We're not going to have the revolution without them. And Silicon Valley has to start paying attention to this and start educating America about how good this will be, because if you get politicians, city council people are losing their races if they say anything good about AI. So a big education job needs to be done. I hope you're listening, folks and investors, because this is become, it's almost like the
political football
Occupy movement combined with the Tea Party movement. It's coming from the left and the right, Maria.
Unbelievable how everything becomes political at some point. But you're right. I mean, go talk to Bernie Sanders about it, okay? Because Bernie Sanders doesn't want all these data centers, and he wants us to consult with China on our AI strategy. Look, I'm all in on having conversations about ensuring that we are on the same models that have security with China, but this is a race, and this is a race to see who's going to dominate here. So I don't know about sharing our information with China on data centers, but you're right. Look, I got to get your take on rates, because today is Jay Powell's final day as chairman of the Federal Reserve. Wow, that happened quickly. Look at the 10-year, up almost 7 basis points right now at a level of 4.55%. And according to Stephanie Pomboy, investors' hopes for a rate cut are now going down. They are worried about this hotter-than-expected inflation data. And maybe it ties Kevin Warsh's hands to cut rates as he begins his new job immediately. He'll be the chairman of the Fed next week. Here's what Stephanie Pomboy told me yesterday. Watch this.
This week, for the first time since 2023, the futures market is pricing in Fed rate hikes. We have switched from anticipating cuts over the next several months or a year to actually looking for some modest tightening. And I think that's a huge story, because we have, as you and I have talked about many times before, a massive amount of corporate debt that rolls. And we also, to fund all this AI expenditure, are increasingly relying on debt. You know, all these companies that were cash cows have burned through their free cash flow to fund this AI expenditure. So the path of interest rates is going to be crucial to that long-term growth forecast.
So, Steve, what do you think? Kevin Warsh walking into a situation unexpected just 6 months ago.
Well, look, Kevin Warsh is going to be the best Fed chairman we've had since Alan Greenspan. I think he was a superb pick. I believe that he understands that we have to keep the dollar as good as gold. We have to make sure that inflation comes down. I think it's going to be a tough choice for him right now to be cutting rates. I don't see how you do that with oil at $100 a barrel and with the latest CPI and PPI numbers. I think job number one for Kevin Warsh right now is try to restrain that inflation. I mean, it's amazing that we've seen. Can you imagine, by the way, once we get that oil price back down to $70 a barrel, which will happen. You know, you talked about the spurt in stocks. Imagine how much the stocks are going to go up once we get inflation back down to, you know, the 2% target. I think that will be the focus of what Kevin Warsh will do. Keep inflation down. That creates a healthy economy.
Well, we're not going to see this rally with legs going forward if we have rates like this, where I mean, 7 basis points higher on the 10-year right now.
I know.
Yeah, I mean, this is not good.
That's all due to inflation. It's all due to higher prices.
Well, I'll tell you who is expecting a very strong market for the rest of the year. That's all these companies going public, Cheryl. You had AI company Cerebras surging in the NASDAQ debut yesterday. Market cap now $95 billion after posting one of the largest IPOs in years. Chipmaker raised over $5.5 billion. They sold 30 million shares. Look where it closed, Cheryl. SpaceX is not far behind. We're expecting SpaceX to go public soon. We're expecting, in fact, disclosure documents to come soon as next week. But Cheryl, Cheryl, the list is long in terms of big mega deals.
Yeah, I mean, all of these IPOs that are coming that are all AI related, AI ancillary, there is more appetite than I think we even realized up until yesterday for these IPOs. And this shows you that the money is there, the banks, I mean, the Cerebrus, right? That was Morgan Stanley, that was Citi, that was, I think it was B of A was one of the other banks. I mean, the IPO market right now, because of the administration, and that's something else Andrew Feldman told me yesterday. He said it's because of this administration and the policies that we're getting from President Trump, who is not just pro-crypto, but pro-AI, and they are making sure that the regulatory framework is positive for these deals, for these IPOs. All of that has just, the floodgates are open. I don't know when the end is, Maria.
I think to Steve, Cheryl raises a good point, because we're at a moment in time right now that we're not just looking at massive innovation and AI changing our lives. We're also, you have to layer on top of that the fact that you've got an administration that's willing to take the shot. You've got an administration that's willing to say, we want to prioritize growth. So that's part of this story here. It's not just the fact that we're in this moment in time where AI is taking over. No. You've got an administration that's actually willing to fund and invest into that future.
No question about it. I mean, this is the most pro-business president that we probably had in our memory. And the argument that works best on AI with the citizens around the country is we've got to beat China.
Yeah. All right, Steve, good to see you. Thanks so much, Steve Moore. We'll be right back. Stay with us.